any shareholder in any oil producing company, you join me in having made a mistake so far in terms of where oil prices went, and who knows where they go in the future.
Not long ago, Buffett was wondering if he made a mistake by buying into Occidental Petroleum. But now he's supersized that bet on oil with $40 billion. Even though oil prices are at all-time highs, what does Warren Buffett know that we don't? To understand Buffett's thinking behind this $40 billion bet, we have to look into the past, where he made two stellar bets. First was Oil and Gas Management Co. in 1956, then was PetroChina in 2002, and lastly we'll look at how his investments in Occidental Petroleum and Chevron, and why they're so different from his previous oil investments. So why did Buffett buy Oil and Gas Property Management back in 1956? His article regarding the stock in a local investment journal gives us some clues. First and foremost, the stock was really cheap. The company had purchased all of their oil reserves at much lower oil prices, with about $10 million to start. Since then, the company was only being valued at $5 million despite growing and throwing out cash. With oil prices higher since the company started, he knew that these oil reserves were worth a lot more than what the company paid for them. Second, the stock was really misunderstood. He had met the management and he knew they were top performers. And Buffett could tell that the income of the company was really understated due to the way they were reporting their accounting. Much of the income the company had made in the last few years was being put towards debt, but not just interest on debt, but rather the principal itself. As a result, they were increasing the equity in their own oil fields over time, something that wasn't really apparent in the accounting. This made Buffett realize that once the debt that ONG had was paid off, the company would start earning dramatically more than it was earning today. Knowing this, Buffett valued Oil and Gas Property Management at $40 million, whereas the stock was trading at $5 million. On top of this, the stock also had optionality in the Yemeni oil fields to drill almost on 40,000 square miles. Lastly, but most importantly, Buffett mentions in his article that ONG was a great hedge for inflation. He expected ONG to increase in price by almost 4x if the price of oil was to move just 50 cents in the right direction. Oil went on to go from $2.94 a barrel to $3.14 a barrel 1 year later, and Buffett struck gold. Hi friends, my name is Maaiz, and I'm a hedge fund analyst turned entrepreneur. And on this channel, I share the research I'm doing to build my own investment strategy every week.
The original price was 20 in terms of US. We sold it from 160 to 200 or something like that.
A nice tidy profit.
Yeah, we made about $3.5 billion on a $500 million investment. As it turned out, I still sold it way too soon.
He struck gold again in 2002 by investing in PetroChina. So how did Buffett find this stock? He mentions as he was pouring through annual reports, he came across an oil producer in China that produced 3% of the world's oil. And on top of that, it paid out 45% of its earnings to its shareholders. This got his interest peaked. Not many oil companies promised that kind of cash. When he then went to take a look at the price of that stock, he found that the dividend would make him 15 cents on every dollar that he invested every year, given the prices. This is before you take into account any other growth prospects in the company. He went on to value the company at around $100 billion, even though it was trading at just $37 billion. Turns out his valuation was way off. PetroChina went on to rise to $275 billion. That's an 8x return in 5 years for Buffett. With these two stellar investments in Buffett's past, you can clearly see Buffett knows what he's doing when he's buying oil stocks. But you still have to wonder, what's Buffett doing buying oil stocks while oil is at 15-year highs? Looking at these two stocks, you can see Buffett almost always bought his oil stocks when the oil prices were depressed. This time around, Buffett is betting billions of dollars on oil stocks, even though oil prices are near all-time highs. Buffett explains his massive bet here.
It's a bet on oil prices over the long term more than anything else.
Now the question becomes, why does Buffett think oil prices can keep going higher? Buffett might believe that inflation will rear its head again, the same reason he invested in oil back in 1956. In 2022, he alluded to his worries for inflation. If you print bonds in your own currency, what happens to the currency will be the question, not the debt. He even sounded the alarm regarding high government debt leading to inflation in a 2009 op-ed asking legislators to reduce the debt. He said, once recovery is gained, however, Congress must end the rise in the debt to GDP ratio and keep our growth obligations in line with their growth resources. The dollar's destiny lies with Congress. Despite this, it's clear we've seen massive amounts of printing in 2021 in response to the pandemic. Oil might just be Buffett's insurance from further inflation. You might ask, why invest in oil during inflation versus other things? Oil and other hard assets tend to do really well during inflationary periods. When looking at different assets and how they did during the inflationary period of the 1970s, we can see that oil and energy stocks did better than most other asset classes. Actually, in the 1970 decade, most stocks adjusted for inflation went down. Really only the hard assets like real estate and energy were the ones that increased in value. Despite this, Warren Buffett would never make a bet based just on inflation. I think he needs a little more than that. In the past, he's always bought oil stocks when oil prices were near all-time lows. So what gives Buffett the confidence to buy oil stocks even while oil prices are really high? The answer to that is the current supply-demand imbalance in the energy market. The world is facing mass shortages of energy. Natural gas prices up 10x in 18 months in Europe.
European gas prices rocketed higher again on Monday. They were up as much as 30% in early trade. The jump came after Russia shut off supplies.
Russia's invasion of Ukraine has led to massive disruption in the energy sector. Russia is by far the largest exporter of oil to Europe and one of the largest oil producers in the entire world. But given the war in Ukraine, Russia has responded to the Western world's sanctions by ratcheting up their energy prices so they can make up for the losses in the rest of their economy. Prices of gas have gone up so much in Europe that governments are now recommending people burn firewood for heat. With such a tight energy market, supply has to be found somewhere. Europe may look more to oil over natural gas for its most basic energy needs, as it's becoming cheaper and cheaper to burn oil versus natural gas. In some places, it's 3 times cheaper to burn oil, and Europe might have no other choice. On top of that, this massive upcoming demand may come at a time when there's not much more oil to go around.
Even if you start investing now in the US, it's going to take a while to get production back up.
According to OPEC, the multinational oil cartel that controls much of the world's oil, they're topped out. They can't produce any more than they already have been. To make matters worse, new oil production takes 3 to 4 years to come online. As a result, even if we were to invest in oil wells today, we wouldn't see the effect of that at the gas station for 3 to 4 years. And that's not all, folks. The supply side of oil gets worse. The world has been investing less and less in oil production as a result of the move to greener energy options. Given this underinvestment over the last few years, there aren't many new oil wells coming online in the near future. So these geopolitical factors paired with low oil investment have set the stage for higher oil prices going forward. This is what gives Warren Buffett the margin of safety he needs to continue buying oil companies even though oil prices are near all-time highs. He's actually so bullish on oil, he recently filed to buy up to 50% of Occidental Petroleum. Now you can start to see why Buffett is buying oil stocks and almost nothing else. To get a better understanding of why Buffett may not be looking to buy more of his other favorite stocks, take a look at my video on why Michael Burry of The Big Short is selling every stock he owns in 2022.